a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about uranium and uranium ETFs, which are getting a boost from artificial intelligence boom. So, from the latest quarterly results that we got from technology giants Microsoft, Google parent Alphabet, and Amazon, these three huge cloud computing providers, they invested $40 billion in their first quarter, mainly in data centers, because there is so much demand for data center capacity to power artificial intelligence workloads. And this race is heating up. No one wants to be left behind. So that is why they are investing heavily in AI infrastructure. And AI workloads are very intensive. Data centers themselves use a lot of energy, and AI applications in particular, they consume even more energy than traditional computing. And so many of these technology giants, they have pledged to use renewable energy to power their data centers to meet their sustainability goals, and they are looking at nuclear energy for their power needs. And governments around the world, including the U.S. government, they are also investing heavily in renewable energy, particularly nuclear energy, because they have come to realize that nuclear energy may be one of the key options for achieving their net zero emission targets, because uranium, which is used in nuclear power plants to generate energy, it is one of the cleanest ways to produce electricity. And currently, nuclear energy accounts for just about 10% of global electricity generation and about 20% in developed countries, including the US. And that is why many new nuclear reactors have come online in recent years, and many existing reactors are extending their operating licenses, and old reactors are restarting. And nuclear energy is also more reliable than solar and wind, so that is why this can be a perfect substitute for data center energy needs and other energy needs. And while demand has been surging, supply remains a big challenge. And recently, the Senate passed a bill banning the import of Russian uranium, and which is now waiting for President's signature. And Russia is a big player in the global uranium market, so banning of their exports could also create a further shortfall in supply and potentially driving the prices up. So let's take a look at three uranium ETFs that have surged because of the sudden increase in demand for uranium and supply challenges. So the first one that I'm highlighting is by Global X. It has about 3.3 billion in assets and has an expense ratio of 69 basis points. It holds uranium mining and nuclear component companies, ticker symbol URA. You can learn more about this ETF by going to the quote page on Zacks.com, and using the link you can go to Global X web page, and you will see that Cameco, which is the world's largest publicly traded uranium company based in Canada, that is the top holding, accounting for almost a quarter of their assets. And they're also invested in a physically backed uranium ETF by Sprott. This is the only ETF which holds physical uranium commodity, and this is also traded in Canada. That accounts for about 9% of the assets. The second ETF that I'm highlighting is by Sprott, and this also holds companies in the uranium industry. This has about 1.8 billion in assets and 75 basis points expense ratio. Let's take a look at what this ETF holds. And in fact, I did a podcast with Sprott some time back. You can listen to that podcast as well to learn more about this ETF and see what it holds by going to the code page and using the link to Sprott web page. Sprott has some excellent research on uranium. So you, if you are interested, you can read the research papers and all. So it's not as top heavy as the global X product. Cameco accounts for about 16%, and the Sprott Uranium Trust gets a slightly higher weight in the portfolio, about 13%. The third ETF I'm highlighting is slightly broader, by VanEck, ticker symbol NLR. This holds companies in the broader nuclear energy industry, has about 170 million in assets, 61 basis points expense ratio. Again, you can learn more by going to the code page on Zacks.com and NLR web page and see what this ETF holds. If you look at the holdings, you will see similar companies that are holdings, but slightly different weights. And you will see, apart from uranium, it holds companies from other nuclear energy companies as well. On the next slide, I have the comparative performance. So you will see that the Sprott product has been the best performer over the past year. So that is up about 80%. The Global X product is up about 65%. The VanEck product is up about 55%, whereas the S&P 500 index is up about 25% over the past year. In full disclosure, I own the Sprott ETF, URNM, in the ETF investor portfolio that I manage. One thing which investors should remember if they invest in these ETFs, that you are likely to see a lot of volatility. So you can see that these ETFs had peaked in February, then they came down, and now they are rallying again. So a lot driven by supply and demand dynamics and news headlines. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. And also make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.